Hey there, welcome to another episode of the Week in Review video for Santiago Synopsis exclusive email for Arlos Wealth and Santiago clients. If you're not a client of the firm, but you're watching this on YouTube, welcome. My job in this video is to break down a handful of headlines that you may have heard from the last week and help you determine whether or not they're impacting your life plan, financial plan, or portfolio. You can find these articles on the Wall Street Journal. I'm sure other people have written about it as well. Let's get to these headlines real quick. There's just four I want to go over. And the first one comes out of Friday, and it was an appeals court rejecting President Trump's global tariffs. So basically, a lower court said that the tariffs that were implemented earlier this year were unconstitutional. They should not go into effect. This court, a higher court, upheld it, which now puts tariffs back in the headlines, make it a little bit uncertainty again about whether these tariffs are going to last. Are they going to come back? President Trump, as confident as he is, says that he knows that these tariffs will come back. But for right now, we're kind of in a stage of uncertainty. Now, if this ruling is upheld, not all of the tariffs will go away. This one is really going towards the 10% underlying for everybody, and some of the other ones out there with Canada and Mexico. But there are other tariffs that were put out there that had to do with automobiles and other things that are not a part of this appeal. So one, is this going to be upheld, and what does that mean? Two, what is a tariff that's going to last? What is a tariff that's not going to last? No one really knows. There's a lot of moving pieces. Actually, you can probably trace it if you want to spend a lot of time, but the point of it is it just adds to more confusion, to a confusing, dramatic year. So when we just thought that maybe tariffs were going to kind of move out of the news, we get this ruling that brings them back into the headlines. And that is one of the reasons that it's being attributed to today's down in the market. You're kicking off the third quarter. Historically, September, crummy month in the market. October, historically, starts out pretty crummy, sometimes finds its footing, and then we run up into the end of the year as the Santa Claus rally. That's been the case the last few years. Now, you know, past performance does not dictate the future, so we can't say that is what's going to happen. No way would I make that my investment strategy to sell in the beginning of September and come back at the end of October or middle of October. But today, you're seeing around a 1% sell-off in the markets, and they're saying, and they being the media and other people are saying it's because of this levy or this ruling that came out last week about the tariffs. So to be determined what happens, but we're not going to be done hearing about tariffs anytime soon, which probably means in the short term you'll see some market fluctuations based off of what comes out. If they're reapplied, the market's going to have a reaction. If this is upheld, the market's going to have a reaction. Some of this will probably find its way to the Supreme Court. So a lot of news and progress to be made ahead of us, which is going to take all of us for a ride. And again, the market's going to have short-term reactions, but I don't think that you should be making your investment philosophy and changes based off of headlines around tariffs. All right, so let's go to some good news. The U.S. economy grew faster than expected. It grew at 3.3%, which brought our year-to-date growth, I think it said 1.4%. So first quarter was slow. Second quarter picked up a little bit faster than we thought, which is a good thing. We want to see the economy growing. So it shows that the consumer is resilient despite headlines and other things going on. But I've talked about this before in past. It's kind of the tale of two consumers. You have consumers at the higher end that don't seem to be bothered by inflation and things that are going on, and consumers at the other end of the spectrum that might be struggling to get by or just making enough to get by. They're feeling it much heavier than those are. So some consumers are doing really well, other consumers are not. But at the end of the day, the U.S. economy grew by 3.3%, which is a positive because we want to be moving forward. All right, so we're going to move to a company-specific topic. I don't do this very often, but NVIDIA is when this article came out after earnings, NVIDIA was the largest company. It sold off on earnings. It's down since then, so I don't know if it's still the most valuable company in the world. But NVIDIA, the chip maker, had a very good quarter in their announcement. So sales were really well, but they did have some language, and this is why I want to bring this up. They had some language about maybe some slowing in their chip sales. There's some unknown with whether or not they're going to be able to sell chips to China. But the reason NVIDIA is so important to the market is this big AI boom, which AI spending by companies is a big part of why the market's doing well and why the economy is doing well. And as long as NVIDIA is churning out chips and coming up with new chips and doing very well, that bodes well for the spending that's going on. And the belief is that's going to help companies and things continue to move forward. A lot of people, if you listen to CNBC and other outlets, are going to say that as NVIDIA goes, so goes the market. They used to say that about Apple. I'm sure there was companies before that. That's not always true, but there is sometimes a little bit of truth to it in the short term. So if we had a situation where NVIDIA comes out and says that sales are slowing more than maybe they expected in this lighter guidance they gave, I do think you would see, one, the stock sell off pretty significantly, but two, the market sell off as well. Now, what could happen is NVIDIA falls and doesn't recover as fast, and the market finds its footing, finds new leaders, and comes back up. So this is what makes investing really hard. Holding NVIDIA over the last few years has looked like an amazing investment. It's in all the ETFs that are out there, so you have exposure to it, but you may not necessarily see it. But I can also tell you that holding NVIDIA over the last few years has been tough. It was down 35% earlier this year, and now it's up 35%. So it's been a wild ride holding that stock. I think it was down 60% in 2022 maybe. So while, yes, it's the world's largest company, or around there, the stock has been amazing the last handful of years. If you've been an investor in that stock, it's been a hard ride. But the nice thing is having a diversified portfolio, having ETFs, you have exposure to it amongst everybody else, and you got to participate in all that, but also didn't have to stomach the full 35% decline earlier this year because you had other funds in your ETF or your mutual fund. But so NVIDIA, just wanted to highlight that because that's the one company that pretty much everybody knows right now and talks about. And it's kind of cool that it's just a chip making company, but they've done an amazing job with the company they've built. And then finally, really nothing to do with the markets, but just an interesting story. I'm sure by now you heard about Cracker Barrel and their rebranding fiasco. It was terrible. And they came back and said, we're going to go back to the old logo with the old man, and I'm not going to change anything. And the reason I bring this up is I just think it's kind of interesting that if you saw the uproar, at least in like the social media world and in the media, like it seemed like this was one of the biggest things going on in the country, and everybody was up in arms enough to get a company to go back on what they were doing. And they probably spent hundreds of thousands, if not millions of dollars with agencies and consultants to come up with this new logo that after a few days of everybody talking about how horrible it is, they roll it back. Money wasted. It's interesting the things that we as a public and as a society get excited about and put all of our effort into to make change. Yet there's other things out there we could probably put a lot of effort behind. If we match the intensity behind the the Cracker Barrel rebrand as we do with child hunger or other things like that that are actually really, really important, like what kind of change could we make? So it's just kind of interesting. Now I know the whole country wasn't paying attention to Cracker Barrel. It's probably not that many people, but the people were loud enough, which I think just shows us how loud our voices can really be. And maybe we should use those for better causes than actually caring about the rebranding of a restaurant. But anyways, it was a cool story. I love to see it go back because I love branding, and I thought that the new design was terrible. So it's good to see it go back. But again, kind of like the secondary thought I had, the derivative of my thought was, man, what if we got that excited about things that were really important? What kind of change could we make in the world? What kind of change could we get from companies and politicians and other things if we banded together like they banded together to change Cracker Barrel back to the original logo? Just something to think about. All right, that's it for today. I told you it was short, 4 quick ones. I hope you enjoyed this. Looking forward to being back in a few days, doing it again. I hope you had a great holiday weekend. I should have kicked off with that, but I wanted to get right to the video. So with that, I will let you get to your day. Thanks for tuning in as always, and I'll see you in the next one.